Welcome to the August meeting of the Governance Committee of Buffalo Fiscal Stability Authority. Our objective today is to review the various policies which govern the BFSA and to consider recommending approval of such policies by the full board. We will also review the annual procurement report and the prompt payment report, and will consider a recommendation that these two items be approved by the full board. Our final item is to review the format of the annual board self-evaluation and approve the submission of this item to each director to complete. First, we'll call the roll.
Sure. Secretary Claus?
Here.
Director Sanfilippo?
Here. Thank you. The first item of business is to approve the minutes of the committee meeting held on December 11th, 2024. The draft minutes are located under tab 1 in your board book. Do I have a motion to approve the minutes?
So moved.
Okay. Second. Any additions, corrections, changes that haven't been noted? Okay. All those in favor of approving the minutes say aye.
Aye.
Opposed? The minutes are approved. We will now advance the agenda to review the BFSA's various policies, procedures, and reports, and we'll consider recommending approval of these items by the full board. The relevant documents are under tab 1 in your board book. Jeanette, can you start going through them?
Sure, absolutely. I'm going to we have a new policy for records disposition. Bryce is going to have a few comments on that. And the report, Claire's going to have a few comments on those. So I'm just going to comment on what changed from policies from year to year, and there isn't a lot. The Code of Ethics remains largely unchanged. It has been updated to include the revised salary, the base salary level for which a person would be determined to be a policymaker or not, and have to require the financial disclosure form annually. So that's been updated. The conflicts of interest statement has been updated to reflect the name change in the Ethics Oversight Commission. It was JCOPE before, Joint Commission on Public Ethics, and now it's the Commission on Ethics and Lobbying in Government, or POLIG is what they refer to themselves as for the acronym. And that is, oh, there was only one other change. That was for our travel policy, discretionary funds policy. The per diem rate for meal reimbursements updated annually by the IRS, $80 a day. We had that change reflected in here as well. So very few changes. We've spent a lot of time over the past years going through these carefully, making sure that they comply with everything that's out there from a state guidance perspective. I will pass it to Bryce if you want to comment on the records disposition.
All right. Thank you. We're just trying to keep up with the state and their requirements for records disposition. This goes back to my internal controls presentation in March when we reviewed it and discussed that there's a new schedule that the state recommends. Currently, we operate under the MI7. We'll be moving over to the LGS1 schedule. So in your book, there's an excerpt, basically the table of contents that shows the documents, and then the form that we need to submit to the state. So it's really just good governance, making sure that we're following what the state puts out there for us. I do want to note that as a public authority, we kind of are in a gray area and we didn't really fall on one schedule. The state is working on this, and there's going to be a revision in a few years eventually, at some point, where there'll be a new schedule that we'll have to readopt at that point.
Great. Thank you.
And then Claire had a couple comments on the two reports that are included.
Okay, so we're required, two of these reports are required by New York State Public Authorities law. One is our prompt payment reports that we prepare annually, and it requires public authorities to annually prepare a report on the scope and implementation of its prompt payment policy. The report should include a list of contracts that BFSA entered into during the fiscal year. So the contracts over in excess of $5,000 that we entered into during fiscal year 2025 were with Lumsden and McCormick. They provide professional services for auditing and accounting, as well as the PSM Group, which is our professional service provider. They're our financial advisor. And we were compliant with all of the provisions of prompt payment. We had no interest payments required, so obviously none paid. Second report is a report on procurement contracts, and that requires public authorities to annually prepare and approve a report on procurement contracts, and that is a written agreement for the acquisition of goods or services of any kind that we actually paid in excess of $5,000. We had 3 such procurement contracts, one with Lumsden and McCormick, again, for the provision of accounting and auditing services. And we paid them $17,600. One with Ellicott Group, which is obviously this building. This is where we provide or pay our rent and utilities to. And the third was Integrity Public Finance Consulting. We paid them $5,500, and that is for compliance reporting relative to the issuance of the debt that we hold on behalf of the city of Buffalo.
Thank you. Any questions?
Is this regarding the agenda relative to all the code of ethics, mission statement, investment guidelines, and so forth? I have a few questions regarding the investments.
Okay.
How much does the BFSA have invested?
The money market account?
Yeah.
Okay.
So we have our money market account that is held, we have a money market account. There's about $60,000 in that returns an investment. And then we also have carved out a portion of those funds that were previously in the money market account to get a better return in there in T-bills that are held, and that's a couple $100,000.
Okay, so you don't have any money invested in repurchase agreements?
There is a small amount FDA with the debt that is held that is being paid off actually September 1st. So there are guaranteed amounts that get carved out as the sales tax money comes in, and those are all reinvested in the debt account.
How much are we talking about?
Right now, it's like there's about $300,000 left in there, and again, the debt's being paid off on the 1st of September, and that account will
complete
close
debt?
out.
Who's our custodial bank?
Bank of New York.
Bank of New York is your custodial, and how often do they mark those securities to market? And whose responsibility is it? Is it the custodial bank, or is it our staff that's supposed to, value the securities that are pledged against that repurchase agreement?
A little bit,
It's okay.
Yeah.
We get collateral statements monthly.
right.
Okay,
If that's, I think that's what you're asking.
sure.
And then mark to market, they would provide their fair market value with their monthly statement.
Okay, so if ever falls below, whatever, of course, I say this, we only have $300,000.
Right.
And it can only be invested for 30 days, but I didn't know how often, on a day-to-day basis, those rates change.
Right.
So,
Yeah, it was kind of interesting. So we intercept debt payments with the 3-month provision. So it has to be collected 3 months before the payment is due, the full amount. And we collect it when the sales tax is made. On the 15th, it gets invested with who we have the forward delivery agreement contract with. Doesn't matter where they put the money. We get a guaranteed rate of return.
But we own the securities, don't forget, right? It's not considered a loan.
It's not a loan.
Right.
No, it's under a financial agreement with the.
Yeah, so we have a master repo agreement in place with Bank of New York as custodian?
Not a repo agreement, but we have a trustee agreement in place. There's no repurchase agreement.
There's no repurchase agreement with the bank that we bought the repo from?
No, it's a guaranteed investment.
With, who's the repo with? We got a $300,000 repurchase agreement with what?
Is it Wells Fargo?
Wells Fargo.
Right now?
Okay. And you have a master repurchase agreement with Wells Fargo?
A master guaranteed investment contract with Wells Fargo.
Is there a difference?
Well, we're not repurchasing anything, we're getting a guaranteed rate of return.
I'm not worried about the guaranteed rate. I'm wondering if the repurchase agreement actually spells out ownership of the pledged securities. In the court, in case something happens with that investment, who actually has ownership of those pledged securities? And that's what a master repurchase agreement does. So in the event that something happens to Bank of
Right.
America, or that they're in a court of law, they can't claim that their ownership of those securities, which would then negate our ability to market those securities. That's what I'm concerned about.
Well, we can't market those securities anymore, they're no longer ours. So we collect the money from sales tax.
Well, wait, they're still pledged in our custodial bank.
They're transferred from our custodial bank to a third party who holds the funds and invests them through a guaranteed investment contract. Then at the time that funds are required to be paid for debt service, those funds, well, they're held by the trustee. There's certain amounts that are held by the trustee. So it goes back and forth a little bit. I'm happy to pull out the guaranteed investment contract and go through that in more detail with you. It's been a number of
Well, does our attorney recognize what's behind why I'm asking these questions?
Yeah, sorry, I'm getting late, so.
Okay. I'm just concerned about the securitization of the buy-sell transaction in a repurchase agreement, where we literally have a master repurchase agreement that outlines the terms and conditions in the event that the financial institution, which I'm assuming is a reporting dealer to the Fed, okay, to determine whether or not we have ownership of the securities pledged against the repurchase agreement. And usually you get a PSA or a master repurchase agreement with whoever you're purchasing the securities for that backs up the investment. I know it's guaranteed. However, I'm more concerned about ownership of the securities in the event that something, maybe inexplicable would happen where all of a sudden Bank of New York or whoever the investment's with says, those are our documents to sell, not yours. Those aren't your securities. That's what I said. And these cases go back to the 80s where it's a buy-sell transaction. It's not a loan. That's guaranteed. In other words, we're not loaning them money with a guaranteed return on investment. We need to know whether or not those securities are actually, although they're pledged, ownership of those securities is for the BFSA. So in the event that something happened, we have the legal right to sell them on the open market. So that's my concern.
I think we need to just go back a step for, everyone out in, the community to understand what we're talking about a little bit. I mean, we're into the weeds a little bit, which is okay, which I think is why we're here, is to be in the weeds and make sure that everything, but people should realize how the BFSA works, is that we intercept money from sales tax that we then invest and then give at a later date to the city of Buffalo to meet their obligations. So we're putting that money in, doing our due diligence to be able to get as much interest or whatever we can to protect the city of Buffalo, and we become then that pass-through. So what we're talking about is how exactly do we do that, and how do we make sure that we're protecting our assets in the best way possible, and particularly under the worst-case scenario, I think, which is what Director Sanfilippo's talking about. If we have another Great Depression or recession, what's going to happen if we see banks have problems where we've invested our money? How can we guarantee best as we can that those funds are going to come back to the city of Buffalo? And we're doing our due diligence here, and I know that the executive director and the staff are working on all of this So it's an interesting question. I think it's an important question. We'll get back to you more about that, I think. But I think for everyone else out there, they need to realize that this is really just a discussion of how we make sure we get the best return on investments as we get money from sales tax, and then at a different time, turn it over to the state.
And that the funds are protected.
And that the funds are protected. You've got that.
We can look at the agreements.
Okay.
Yeah, I think that that's fine. Okay, are there any other questions as we go along? Any of the other directors or anyone have something to say? Okay, if not, I'll request a motion to recommend the approval by the full board of those policies and reports provided to us under tab 1 in the book. These include the bylaws, the code of ethics, the mission statement, the investment guidelines, the property disposal guidelines, records disposition, use of discretionary funds policy, whistleblower policy, lobbying policy, procurement guidelines, the annual procurement report, the prompt payment policy, the annual prompt payment report, and the conflict of interest policy. Do I have a motion?
So moved.
Okay, second? Okay, all those in favor say aye.
Aye.
Opposed? Great, we have, those policies will be recommended to the board. Our next item of business is to review the annual board self-evaluation and recommend its submission to each board director for completion. A copy of the policy guidelines from the authority's budget office have been included under tab 1 in your book, and the format is consistent with what we have used as BFSA over the last several years and is in the format provided by the AOB. May I have a motion to approve the distribution of the annual Board of Directors evaluation to each director for completion?
So moved.
Okay, second. All those in favor, say aye.
Aye.
Aye, okay. Essentially, it's just a one-page item that all authorities and other entities have to fill out every year, and is helpful if we want to discuss certain items about how the board is run or whether or not there are any concerns. So hopefully all the board members, particularly the new board members, will enjoy filling out their first form with us as we go on. This concludes our business. Is there any new business? Andy, you have anything else?
No.
Okay. If not, all those in favor of adjourning, say aye.
Aye.
Opposed? Thank you. We are.
Only two of us.